What is up, everybody? Welcome to the first ever video edition of Market Briefs by the Minority Mindset. Today is September 9th, and here's some business and financial news you can finally use. We'll kick today's Market Briefs newsletter off today with the top dog in crypto, GameStop, reported earnings yesterday and generated a net sales of $1.2 billion. That number is up from last year's second quarter, but the company still missed on earnings per share last quarter. Moving on to the market recap for the day, the S&P 500, NASDAQ, and Dow all finished in the red yesterday as markets continue to struggle to find a positive direction so far this September. In addition, world markets are also taking a hit as some investors are getting stressed out over the pandemic and the effects it's having on the global economic recovery. And for our financial tip of the day today, we have an awesome comment from one of you who commented on one of our YouTube videos. That's right, we read all of the comments over here at the Minority Mindset, so if you want to join the conversation or just have something to say, leave a comment on our YouTube, Instagram, or TikTok accounts. This comment in particular was from ThatGuy13 on our YouTube channel, and the comment reads, "If you get nervous or anxious if your stock drops 2%, do not invest. It's not for the weak-minded, easily frightened individual. Separate emotions from logic when investing and think long-term growth." Thank you for that comment, ThatGuy13, and all they're basically saying here is that once you start investing, it doesn't matter what the market does, whether it goes up or it goes down. You'll want to think long-term with your investment and keep your money in the market for 5, 10, 20, even 30 years at a time. It's important to remember that markets move in cycles, so some days your investment might be up and some days your investment might be down. Over time, though, markets do tend to trend upward, so think long-term and don't worry about what happens on a day-to-day basis. Also, keep in mind that you're never guaranteed to make money when you invest. So only invest what you can afford to lose and always stick to your long-term goals and plans no matter what. For our first story today, we'll be talking about an item of the year candidate, shipping containers. Here's what happened. Shipping containers are the most trendy item of 2021 so far, so you better get them while they're hot. But as it turns out nowadays, they're pretty tough to buy. Typically, to rent a shipping container, it would run you around $1,500 to $2,000, but the pandemic has really changed that. In fact, it's caused a global shortage and the prices are skyrocketing. Some businesses have now had to pay over $14,000 just to rent a shipping container, and it gets worse. Sometimes they don't even show up. Right now, the global supply chain is in a pretty deep hole, a 2-year deep hole, as demand for goods and services just continues to rise. Overall, shipping container prices are up by about 600% compared to this time last year. So how exactly are businesses coping with the shortage? Well, so far, bigger companies like IKEA have been buying shipping containers at a premium instead of renting them. However, smaller companies don't have the thousands of dollars necessary to buy or rent shipping containers. So these companies have been forced to raise prices in order to gain more revenue or cut expansion plans in order to cut costs. So if you're one of the lucky individuals or companies that has a shipping container lying around right now, you're basically sitting on gold, but probably a lot less shiny. Our second story of the day today is in crypto, and we've got flash, crash, and steady as Bitcoin is just having one of those weeks. On Tuesday, one of the most popular cryptos in the world dropped steadily as El Salvador announced it would adopt Bitcoin as an office currency. The El Salvador experiment, as some are calling it, has caused some major volatility in the market as most of the major players in crypto have sank this week. Yesterday, though, Bitcoin managed to steady itself, at least for the time being. So you're probably wondering, what was the catalyst? Well, El Salvador's news may have led some traders to book some profits over the relatively positive news. Also, the rollout was definitely not as smooth as it could have been, as the Chivo wallet was not available at the start. Plus, you saw hundreds of people protesting Bitcoin near the capital of El Salvador. But honestly, the flash crash and the level out movement is really nothing new for Bitcoin. Bottom line here is this. Cryptocurrencies in general are rooted in speculation and volatility is just par for the course. So what's next for the digital coins? Some of the largest digital currencies like Bitcoin and Ether have grown steadily within governments. And as more government-issued electronic currencies get released like the digital dollar, it'll become a lot easier to cut rates and drop them below zero because people can't hoard physical cash anymore. So what do you think? Do you think that government-issued electronic currencies will ever replace physical money? If you do, or don't, drop a comment below and let us know your thoughts. And Money Minds, this newsletter and me actually sitting here would not be possible without today's sponsor, Fiverr. Fiverr is an awesome online tool that allows you to grow your brand all while saving time. Whether you need a writer, logo designer, or a coder, Fiverr's online marketplace of freelancers are waiting for you and they're willing to do the work for sometimes as low as $5. In fact, Fiverr opens up a whole new world for businesses because you can just search for what you need and find somebody almost instantly. When you go with Fiverr for your online work needs, you'll get full full transparency so you can track your team's activity, VIP customer support, which has quick response time and will help you get what you need fast, and easy billing options, one team, one payment method. Fiverr is a super convenient, easy way for you to save money and time in your business, so if you want to learn more about Fiverr and what they offer, I'll leave a link in the description below. In today's Mind Blown, you better get your shades on because we have sunshine ahead. Here's what happened. The White House announced a plan to supply almost half of the country's electricity with solar power by 2050. As of last year, 2020, only around 3% of the nation's electricity came from solar power, but this plan wants to boost that by 40% by at least 2035. The plan will then increase that number to 45% by 2050. At the moment, yearly solar capacity additions would need to double production annually until 2025 in order to meet this goal. The plan also describes solar power as the cheapest and fastest growing energy source in the world, and the project could employ nearly 1.5 million people. Here's who's going to pay for it. Environmental groups are pushing Congress to give around $191 billion and around $265 billion for tax credits for renewable energy sources such as solar and wind. And right now it is super unclear if this new solar project is fully included in the $3.5 trillion infrastructure bill, so we'll have to wait and see. Let's take a moment here to actually pick your brain and invest on your terms. Whether you're new to investing or spend way too much time on Wall Street bets, you probably know by now that most brokerages don't let you automate your investment. Honestly, we think that's kind of crazy. Luckily for you, M1 Finance is not like most brokerages, and it gives you the power to actually invest on your terms without paying a penny in commissions. If you want to learn about how to start investing with today's second sponsor, M1 Finance, I'll leave a link in the description below, so be sure to check that out before you go. And in case you didn't already know, stock market investing takes plenty of time, patience, and practice. Which is exactly why this week, the Minority Mindset announced its brand new top-tier investing program, Stock Market Mastery. For less than 1 cup of coffee a day, you'll get instant access to coaches with tons of experience in the stock market. These coaches will help teach and push you to become the best stock market investor that you can possibly be, and will even create personalized plans to help you reach your goals. So if you're interested in learning how to build wealth and invest in stocks like the pros do, check out the link in the description below, and if you're not happy with the program after 30 days, you'll get your money back 100% guaranteed. It's that easy. But moving on to today's mind break, it looks like robots are stealing our jobs. Or at least they're just filling gaps in the labor shortage until humans are actually ready to step back in. Here's what happened. The restaurant industry especially has struggled to find new employees lately, and a Texas-based robotics company, American Robotech, is offering businesses robot help for only $15 a day per robot. Right now, it looks like the robots operate more as an assistant to servers by greeting customers, carrying food tables, and even singing some customers happy birthday. And according to one restaurant owner, the robotic help brought in nearly 50 to 100% more business than before. And it did so with only around 1/3 of the same human staff working. And it's not just the restaurant industry, as cashiers aren't safe either. Amazon is bringing their cashierless technology to 2 Whole Foods locations by 2022, but it doesn't look like there'll be any singing robots there. And Amazon's Just Walk Out technology has allowed customers to do just that. Walk in, grab their groceries, and leave. Cameras and other technology keeps track of all of the items that customers pick up within the store. And once the customer walks out with those items, Amazon will then automatically bill them. If there are any customers that do not want to use the Just Walk Out method, then Amazon has the self-checkout for the more traditional shopper. And finally, Money Minds, we have a few things to keep in mind here as we end today's Market Briefs newsletter. A 100-foot tall rocket exploded midair during a test launch in California, shrinking the hopes that startup company Firefly may put a rocket into orbit sometime soon. You could say it backfired. Another thing to keep in mind today is Toyota is amping up its electrical vehicle production by investing $13.6 billion in car battery tech over the next 10 years, and another $9 billion going towards production in that same time. Next up, PayPal plans to buy Japanese buy now, pay later company Payday for $2.7 billion. This move will help it extend its reach into Japan's massive e-commerce market. And it looks like Volkswagen is going fun size as it recently unveiled its new electric vehicle, the ID Life, which is a tiny box-like SUV for driving on skinny city streets. That is it for today's business and financial news, Money Minds. Keep hustling, and I will see you all in the next one.